This week on the agenda, the end of globalization as economic turbulence rocks the markets. One of Britain's best-known businessmen gives his take on how to weather the storm. Recent global events have undoubtedly exacerbated an already turbulent time for the global economy. So from Ukraine to COVID, big data to big tech. This week, I discuss it all with one of the UK's most famous businessmen, advertising tycoon Sir Martin Sorrell. I started by asking, in his decades of experience, whether he'd ever seen anything like this before.
It's happened so quickly, because if we were having this conversation on January the 1st of this year, we really wouldn't be aware of withdrawal of COVID stimulus. We wouldn't be aware of rise of interest rates, the consequent increase in inflation, the war, and of course the COVID lockdowns, the extended COVID lockdowns in China, which are thankfully seem to be easing off at the moment. So those five things, plus everything else we've had to deal with around COVID and climate change, and which are climate change being a much longer range thing. Probably that confluence of things is probably unprecedented. Dangerous thing to say, because somebody will pop up and say, no, we've had it before. But this is probably a cyclical recession, but maybe a recession or a cyclical slowdown, but with sort of a longer time frame than probably usual. I don't think that the difficulties will shake out until we get into the US presidential cycle in 24. I mean, we've got the midterms coming up. The one thing that's happened that may change that dynamics is Roe v. Wade. This reversal of the Supreme Court decision might stimulate the electorate to vote, which historically about a third of the US electorate votes one way, a third the other way, and a third don't turn up. But maybe Roe v. Wade will galvanize particularly the centre-left, particularly the Democrats. That might alter the dynamics of it. But
were those the people that would stay away from the voting booths in the first place?
Sorry?
Were those the part of the electorate that would have stayed away from the voting booths in the first place? The people you're talking about would probably have voted anyway.
Well, it's difficult, obviously, to figure that out. My view would be that this slowdown or recession, whatever it turns out to be, the dynamics don't really change in the midterms in the US. And the US economy is the driving economy, along with the Chinese economy of the world. I mean, the world is about 90-odd trillion, 92 trillion, I think it is, 94 trillion of GDP. The American economy is about 24, the Chinese economy is about 14, so it's about 38 in those two. So those two economies are the central drivers. I mean, on the Chinese economy, I'm probably a little bit more bullish, because we've already seen it in the Chinese stock markets in the last month or so. They've been much better performers from a much lower base than the Western stock market. So net, I think this is a slowdown and potentially a recession. There's probably about a third probability of a recession either later this year or into next year, maybe even more. Some people say it's 50-50 for next year. This is going to carry on, I think, until it's broken by the political dynamics in 24.
You're talking about changing political tectonics, and it's very much a numbers game as well, with 40% inflation and fuel prices like we've never seen. You're saying a global recession is inevitable sooner rather than later?
I'm not saying it's inevitable. I mean, there's a big debate as whether it's stagflation, whether it's a recession. I think basically it will probably be a shallowish recession, but that takes quite some time to come out of it, because I can't see what the dynamic is. Those five things that we went through, from withdrawal of COVID stimulus to the lockdowns, I can't see what breaks those dynamics to a significant degree.
So was the recovery we started to see in 2021 a false dawn?
Wasn't never a false dawn. What we saw was the impact of a huge spending around COVID, quite rightly, to try and buttress the economy at a time when it was needed. So it was the impact, I think nobody's really sort of calculated this, but if you work out the sum of all the government infusions as a result of COVID, the world is about 90 trillion, as I said, and there's probably about 10 to 15 trillion that was pumped into the economy. I mean, Larry Summers was calling out President Biden a year or so ago, and he's proved to be quite right, that the heavy spending that the Biden administration started to put in after 2020, not just from COVID, but in other areas too, drove price increases. Now, Larry Summers is saying you need 5 years of 5% unemployment to get price stability, defined as, I think, as under 2%. And I think people are starting to accept that inflation levels are likely in the long term to be greater than 2%, that the Fed or central banks will be unable to temper inflation to the degree needed to get to 2% because of the impact on employment. So there's this balancing act. But the answer to your question about, was it a false dawn or not? No, it wasn't a false dawn. Governments were quite rightly forced to support the economy. And what you saw in 2020, S4 grew at 20%, which was exceptional given COVID. The year before we were up 40%. Last year it was 44%. We're a small factor, we're not a big factor, but focused on the digital economy. But what it tells you is that the government stimulus, that the COVID stimulus, really buoyed the economy in 21. CEOs in Western listed companies were saying, gosh, we had a terrible 20. They forgot about that immediately, and they said we had a record 21. But they forgot that they had their worst year ever in 2020. So, no, what you saw was the withdrawal of what you started to see was the input of the stimulus, and in 22 we've started to see the effects of withdrawal.
Now I know you're quite.
It was sorry to put it. Probably the best way of putting it is a false dawn, because it was not artificially stimulated, but the boom was as a result. In March and April of 2020, we were all at death's door. I mean, talk about previous recessions. I mean, the bottom fell out of the market, and people misinterpreted or misunderstood what was going to happen in terms of government support. And in fact, what happened during COVID in 21 is that companies were better run for a couple of reasons. Firstly, because the centre couldn't travel, so they couldn't interfere with the operating activities of the company. So there was dispersion of authority. That was good news. Secondly, office costs came down because people were vacating offices. And thirdly, travel costs came down. So margins improved. One of the stresses and strains in 22, apart from the pressure on top line growth, is going to be the margins probably won't be as good.
Let's come back to talking about the economy, because I know you're quite bearish when it comes to Europe. So where's the growth going to come from?
Well, the growth will come
North
and South America. Middle East, huge because of the increase in oil price and commodity prices. Bits of Africa. A great Chinese interest, as well as Latin America, a Chinese interest. And then Asia, Asia Pacific. But it's more varied because the war in Ukraine has raised in CEOs' minds and companies' minds the security risk, the war risk, and of course there are tensions, rightly or wrongly, in Asia too. So it sort of modifies, but I think basically it would be risk on, as I would put it, in North and South America, Middle East, parts of Africa, although Africa's quite difficult, quite volatile, and Asia Pacific. A risk off would be Europe. I think the problems in Central and Eastern Europe, I mean, whatever happens, whether a peace is negotiated, it looks as though the war will go on for a significant period of time. But even if there was a solution, let's say there was what many people call a bad peace, which would be Ukraine surrendering Donbass, the Donbass region, as well as Crimea, to Russia. There is a danger that without regime change in Russia and regime change to a more, let's say, constructive relationship with the West, it's likely that maybe the Russians would regroup and then pursue policies which President Putin has made quite clear, not just since 2014 in the Crimea, but before.
And what about the relationship between the United States and China? I know you think that's quite key.
Well, it's absolutely key. I mean, it's the two biggest economies in the world, the two economies that, are probably amongst the fastest growing or the fastest growing. And it's key that they have a constructive relationship. And unfortunately, this goes back a long time. This goes back to maybe President Obama. Certainly was the case under President Trump. And to be fair, was welcomed by certain sections of the business community, industrial community in America. Both sides, have hardened in their approach and their attitude. I mean, you see the EU committing to a 600 billion infrastructure fund, which is an attempt to create a European Belt and Road, if you like. And so you see these tensions and frictions, and that's a problem. And what it will result in is, more tariffs, more frictions for trade. And what we've had for the last, I've been sort of active, I guess, since the late 1960s or the early 1970s or middle 1970s. So let's say it's 45, 50 years. And we were blessed by free trade, growth in free trade, the reduction of tariffs and barriers, and that has stimulated the world economy. So I think what's going to happen is that the world will grow, but it will grow at a slower pace. I mean, for example, the beginning of this year, January the 1st, we were talking about 4 to 5% this year after 5 to 6 last year. Now we're talking about, we'll be lucky if we get to 3 this year, and people are talking about 1.5 next year. That is below trend. That's below what we've had before. And I think we probably have to get used to a world where growth is below trend and inflation is higher than we've been used to. So it's back, going back to your original question about what's the most like what we're going through now, it's probably in the 1970s. And when there was significant inflation and prices got out of control.
So is this the end of globalization as we know it?
I don't know about the end. Larry Fink says, at the end. I mean, I don't know whether it's as dramatic as that. But if Ted Levitt, the Harvard Business School professor who wrote the seminal article in October of 1983 in the Harvard Business Review, if he was right then, and he over-egged the pudding. I mean, he admitted that his thesis was that consumers would consume everything in the same way everywhere, and we've seen that in China. We've seen the growth of consumption, but now China has shifted, and younger people in China are looking more closely at Chinese products and services, and self-sufficiency, if you like, and less towards the West. I mean, in the surveys that we do and the polls that we do amongst the millennials, it's quite clear that view of the West has changed, good or bad. It's changed. So, the danger is that we have the two most dynamic economies in the world going in divergent directions, whereas one hopes that it would be much more integrated. So the hope is that the leadership on both sides will be able to develop a constructive dialogue. It doesn't look good at the moment, and the approach on both sides has hardened over the last few years, and it doesn't look like, I mean, when Trump lost the election, although he denies he's lost the election, when President Trump lost the election, I suppose there was some hope that maybe President Biden might pursue a different course with Blinken, but that has not happened.
My conversation with Sir Martin Sorrell continues after the break, so stay with us on the agenda, as still to come, he tells me why data could be the new oil.
Roger, repeat loud and clear.
We can try out the wild and crazy ideas.
Nothing can stop an idea whose time is coming. This idea is coming.
I actually feel quite comfortable in isolation.
We should all be very basic when we're trying to save the world.
Awesome!
We hope it will happen. We have to live in hope.
Welcome back to the agenda. More now from my conversation with UK businessman and advertising guru Sir Martin Sorrell. Before the break, we discussed how political tectonics can change global economies and whether globalization could become a thing of the past. My next question was about climate change. I asked Sir Martin if he thinks net zero goals have wandered too far out of the political spotlight.
Well, the danger is that with slower growth, particularly with private companies and public listed companies, that the priorities will be on short-term performance rather than the longer-term goals. I mean, my view is that a lot of the discussion around climate change and similar areas is sort of too intellectual and too ponderous and too complicated. And to my mind, it's very simple. If you're in business for the long term, you're going to do everything to make sure all the stakeholders are looked after. Your people, your suppliers, your partners, NGOs, government, whatever it happens to be. If you're in business for the long term, so you take Milton Friedman's thesis that the role of a company is to maximize profit, but you say maximize it in the long term, not in the short term. And in that way, you get rid of all the conflicts. Unfortunately, when you have short-term economic pressure, the priorities shift. You don't have the luxury of top-line growth to give you a little bit more wiggle room, a little bit more opportunity for expansion. That economic pressure puts pressure on the priorities and makes you much more obviously short-term focused. And in the Western environment, where you have quarterly reporting, and indeed the institutions are incentivized around quarterly performance. I mean, it's not just on the company side, it's that has to change in terms of thinking about the long term, but institutions too. Now, private equity, which controls probably about 15% of Western industry, and at the margin is probably doing half the deals, so they're increasing their share. Their hold periods are 3 to 5 years, probably not long enough. Listed companies, there's quite a lot of churn. I think McKinsey says the average listed company lasts for about 12 years in the S&P 500 or the FTSE 100. So you've got great rotation, and therefore people are very sort of focused on short to medium term performance. And the danger, as I say, is when the pressure intensifies, that those sort of long range issues or opportunities are put on the back burner.
So looking at those long-term issues like climate change, and then hopefully shorter-term ones like the conflict in Ukraine, how's that all affecting how your clients think about risk?
Well, I think there are two things. There's the geographical thing that we talked about it before. So risk on in North and South America, Middle East, parts of Africa and Asia Pacific, risk off, if you like, in Europe. That's one thing. And the second thing is technology. I mean, one of the interesting things about the war is it has demonstrated the importance of technology. When the German government spends 4% of its GDP on defense, which it historically has not done, or certainly since the Second World War it has not done, what they're going to invest in is not just missiles and military equipment, or indeed people. They're going to invest in tech. Cyber defense and cyber offense is critically important. So what the war has done is demonstrated yet again the importance of technology. And you see it in the West and the East. I mean, the three big platforms in the West have come under regulatory pressure. The three in the East have also come in under, Alibaba, Tencent, and ByteDance or TikTok have come under pressure as the Chinese government intervened in private education, in gaming, and some of the social issues around social media. So, and I think what we're starting to see is a realization by governments on both sides, both West and East, that a strong tech sector is really, really needed increasingly for the health, the economic health and defense of the nation.
So technical transformation becomes all the more important. Yeah. What's your take on tech stocks and what's happening to them?
Tencent has done incredibly well. And the new kid on the block is TikTok and ByteDance, which has done, it's probably double what, as a result of what I saw and heard in Cannes, I would put probably TikTok at twice the level in terms of ad revenues that I thought it was. I mean, the world, Google is, so last year, the digital media, or the media economy globally was about 750 billion. Digital was 450 billion. Google was around 215 billion. Facebook about 115, and Amazon was 31. This year, Amazon looks like 41. Probably a Facebook or Meta around 130, 135, and Google around 235, that level. Tencent, last time I checked, was about 100 billion. Alibaba, I don't think give their ad revenues out. But TikTok, I thought, was around 30. I think it may well be double that. I mean, because they've been expanding their non-Chinese business. You went back 2 or 3 years ago, it was purely a Chinese business. Now it's an outbound Chinese. You know, people think that the big platforms don't have, the Western platforms don't have big businesses in China. Well, in one sense, they do, but in another sense, they really do, and that is outbound Chinese. So every one of the platforms, that Chinese companies looking to expand globally, which there are many and many very successful ones, will be using those platforms. So that outbound Chinese profit center can be the second largest in most cases.
If it's all about the data, though, and I know that's something that you've been thinking about too, why do you think it is the new oil? What is it about?
Well, you know, if we look at what our clients are doing, so the digital economy in most of the segments that we're in, whether it be the media one that I described, marketing services, which is 500 billion, trade budgets, which is 800 billion, or digital transformation, which is 400 billion. So our addressable market is about 2.4 trillion, so it's huge. Wherever you look there, you know, digital is probably about 60% of the market. It's forecast to go to 70% by 2025 or 24. It's forecast to grow in most of the markets in which we operate in, but 10 to 15% at least, and in the transformation markets even higher. In order to get all of that done, or most of it done, given what Google has done on deprecating third-party cookies, given what Apple has done on IDFA, what it means is that the data that's really important, or there are two sources of data that are really important. Firstly, first-party data. That's data that you own as a client. You know, you're shopping with somebody, or you're buying essentials, or whatever it happens to be, and they have that data. You consent to it. If you don't consent to it, you know, that deals with the privacy hurdle, but consent to it. The issue for the client is how can they integrate that first-party data all together in an effective way. So that's one source, and then the other source is from the platforms. Alphabet, Meta, Amazon, Alibaba, Tencent, ByteDance, TikTok, Kaohsiung, whatever, have these sources of information around signals about what you're doing online, which when melded together with the first-party data is extremely effective.
So looking at the media companies who are getting it right, I mean, who are the trailblazers, who are lagging and need to step it up? You mentioned TikTok as being a shining example.
Well, it's the 6 that I mentioned. It's the 3 Western and the 3 Eastern. Beyond that, I mean, Apple is building a very effective advertising platform. It's probably up to about 10 billion as best as we can. But you know, relative, I gave you the numbers relative to the numbers that we're talking about elsewhere, still at the smaller end, but growing very rapidly. I think Amazon will get to 40 billion this year. I think they'll get to 100. I think you know, TikTok will probably get to that level. ByteDance certainly as a whole will get to that level. Apple will certainly start to develop its business even stronger. You've seen Netflix now developing an advertising-based model, and Disney Plus. So you're going to see, you know, I think next year at Cannes, Netflix will be there in force if it's developed its advertising platform. So you're going to see those. The other platforms, Twitter, Snap, Pinterest, are relatively small. That doesn't mean they're unimportant, but just the orders of magnitude. Snap's about 5.5 billion. Twitter, I mentioned, is 4.5 billion. Pinterest is smaller. So the other platforms are much smaller. The ones that really have made inroads are the big 6.
We started off talking about record inflation, high fuel prices, the cost of living crisis. And now you're talking about all these opportunities in tech markets and how digital transformation is getting
there
quite
have to be some opportunities,
exciting.
otherwise you throw yourself out the window.
Oh, so is the future bright?
Sorry?
Is the future bright after all?
Well, I think we had a very strong bullish run, not just in the West but in the East too. There has been an adjustment. There had to be an adjustment. There's been a cyclical adjustment. I think this is a cyclical recession. I don't think it's structural, and I don't think it's event-driven like COVID in 2020. So I think this is a cyclical recession. It may be, from what you see in it here, longer. I don't think it's going to be phenomenally deep. When people start to talk about stagflation, what they're sort of indicating is there'll be very slow growth, but with price inflation. I think it will last for some time. I think the game has changed, and you have to be much more selective geographically, and much more focused on technology. I mean, what will bail us out of all this is technological advance, and that would improve productivity, reduce prices, reduce costs, and help us out of the inflationary spiral that we're in at the minute. I mean, spiral upwards that we're in at the minute. If we start to see maybe by the end of the year that interest rates have peaked at 3.75 whatever for whatever, and that the next leg is down because of worry about employment particularly, then you might see markets. Markets move 12 months in advance of what's happening. I mean, we're earnings. We're going into Q2 earnings season. Probably they'll be stronger. My guess would they'll be stronger, but everybody's in denial of the recession, and nobody wants. They don't want to be a CEO of a listed company. Doesn't want to be the one to call out the recession. So they say, well, we haven't seen anything yet. I mean, we've seen clients go down the funnel, which means they become much more activation orientated, performance orientated, measurement orientated, results orientated. Many of them are worried about making their KPIs, their key performance indicators. So they're really putting on media measurement. Am I spending the right amount on digital? Could I switch money either way, to traditional or away from traditional, and get better returns? So people are very focused on results and performance. That we've seen. Now, in theory, that helps us because we tend to be more lower funnel activation orientated. So less money being invested from a marketing point of view on brand and more on activation and performance.
So looking ahead, is the big question mark then not this year, but 2023?
Well, I think the rest of 22, people are nervous, so they're likely to be cautious. But 23 is when the earnings, the P has come down of the PE, the E hasn't adjusted. So we're going into Q2, it'll be better than people expected, I think. But then people will start looking forward to the whole of 2022 and start to think about 23, and then there'll be adjustments on the E too. So,
but in terms of the global economy, in terms of the global economy, just in a nutshell?
Well, I think it's going to continue to be difficult in 23. Yeah, I mean, I listening to a call last night, I think they were calling for 7% companies to grow their earnings by 7% this year and 0 next year. 0 next year reflects growth in oil or energy companies and commodity companies. So if you take those out of the, it means that the real companies or non-oil, non-energy companies are going to be even tougher, in a tougher position.
So Martin Sorrell, absolute pleasure talking to you.
Thank you very much.
Thank you for your insight.
I hope I cheered you up.
You can watch every episode of The Agenda in full on CGTN Europe's YouTube channel. And for exclusive extra content from me, my guests and the rest of the team, don't forget to check out @The Agenda Show on TikTok. Coming up on a future agenda. A year on since the fall of Kabul, we find out how life under Taliban control has changed Afghanistan. But for now, from me, Juliet Mann, and from all of the Agenda team here in London, goodbye.